You are now tuned into The Money Zone.
Hey guys, welcome to the Money Zone. I'm your host, Folasade, the Accountability Accountant, and I am so excited to be here with you guys on this somewhat rainy day here in Maryland. On tonight's show, guys, we're going to talk about your business tax filings that's due next month. We're going to talk about amended returns. I get the question all the time. Folasade, should I file an amended return for this? Should I file an amended return for that? Oh my gosh, I think my taxes was filed incorrectly. Should I do an amended return? So in tonight's episode, we're going to talk about your amended returns, when you should file them, why, when you shouldn't, and things like that. So I hope that you guys engage in tonight's conversation. If you're watching us on any social media platform, you can post your comments under the video, and I'll be gladly to possibly answer the questions live throughout the show. Also, if you want to catch the replay, you can head over to Rip Radio app, go to your app store, whether it's Google or Android, go right into the app store and type in Rip Radio Network. And then you'll be able to download the app and catch my show live right in the app each and every Tuesday or after the show. Or if you don't want to do that, you can head over to Amazon Podcasts, Apple, and everywhere podcast is housed to check out tonight's and any other show replay. So if I were you, I will share this video up with someone that you know of that is always struggling with tax problems, never always feel like they got to correct something. You know that friend, you know that cousin or that family member that seems like they never had their tax stuff in order. Share them this video tonight, and you want to grab your pen and your paper so you can take some notes about when you should file an amended return, know when your tax due dates are, and things like that. So what we're about to do is take a quick little break, and then we'll be right back. Hey guys, welcome to the Money Zone. I'm your host, Folasade, the accountability accountant, guys. I'm pumped to be talking about amended tax returns, which you guys may call incorrect tax returns. So, first things first, guys. Yes, you can file an incorrect return. Yes, you can also correct your return. So, if you are correcting a tax return, we consider that an amendment. Okay. So the moment that you correct a already submitted tax return, you are now amending that tax return, meaning you're making changes of some sort, some type of changes, whether there be changes to your filing status, changes to some credits, changes to something. So the moment that you are trying to submit an amended return, you're saying you want to change something. And so the changes can vary. So some of you may have not claimed one of your children mistakenly, right? Then you may want to amend your return. So you will amend your return to add on that child that you left off. Okay. You will possibly also amend your return if you mistakenly filed single, but you wanted to file as head of household. You will also make that adjustment. And the reason why you want to amend the return for those two reasons is simply because the IRS will not change your tax return to add your child on. Even if they know last year you filed with 3 children and then this year you only have 2 children, the IRS will not correct that for you. So you would have to submit an amended return. Okay. So let's say, for example, you did single rather than head of household. Same thing is applicable. The IRS will not correct your filing status. For real, they would rather you stay single than take the head of household status, because then you may not get a refund. You may owe a little bit more or something. So it may be more beneficial for the IRS to leave those type of things off of your tax return. So it is so interesting that, and I had saw this post on social media. I don't know if it was Instagram or Facebook, but more than likely it was Instagram. And the post had said, well, since the IRS already know everything about our taxes, our income and everything, why won't the IRS file the return on their own? So that's just like us filing a return without our child. The IRS is not going to amend it. They're not going to file your taxes for you either. And the reason being is because it's voluntary. It's voluntary for you to put your child there. You're not forced to claim your children. You're not forced to claim, head of household status. You're not. So the IRS is not going to make those changes. So if you have those two distinct changes that you need to make your return, you may want to do an amendment to the originally filed tax return. Okay. So the third reason why you guys may want to do an amended return is because you left something off. Now, you may have left off a 1099 from a contractor's position that you hold. You may have left off the amount of income that you were supposed to be claiming. You left off something, right? So in that case, you want to amend that return. Now, here's the thing, and it gets very tricky because in some situations, the IRS will automatically make the adjustments, right? And then in some situations, the IRS is not going to make the adjustments, okay? So let me give an example. Well, they're not going to make the full adjustment that needs to be made. So let's say you left off one of your W-2s. You don't really have to do an amended return to add on a W-2. You don't. Because it's simple. The IRS would just simply add it on and say, hey, we made an adjustment to your tax return. We added on this, and that's it. right? But let's say it's a 1099 from PayPal or Stripe or something from your business, right? The IRS is going to add that on, but guess what? They're not going to take your expenses. They're going to say, oh, you left off this income on your tax return and we've added it on. Now, this is what you owe. So what if you didn't claim any expenses? What if you didn't even claim the business? So you're going to end up letting IRS make the adjustments without you amending it? No. So if you have a 1099 from business income or independent contractor income, you guys want to make sure that you amend those returns, because the IRS amending those returns are not in your best benefit, because they're just going to add that income on and they will not take any of your expenses. Okay, so we already talked about what, 3 scenarios. That's if you want to do an amended return, it's not unnecessary, because a lot of people will say, oh, Folasade, I want to do an amended return. It's not necessarily you want to do an amended return. It's more so, do you need to do an amended return? Okay. So the 4th scenario, in terms of you guys wanting to do an amended return. So let's say, for example, you withdrew some money from your retirement account, especially in 2022 tax year, right? If you pulled out money from your retirement account and it was a COVID related withdrawal, then you were able to split out that withdrawal between 3 years. So it will be on your 2020 return, your 2021 return, and your 2022 return. In that particular case, the IRS will not make that adjustment for you. They will not split it out. They will not take the COVID relief benefit for you. So you need to take a step back and do an amended return if you withdrew money from your retirement account, specifically considered COVID relief. Then guess what? You want to do an amended return, because the IRS might slap it on and say, uh-oh, it's subject to the early withdrawal penalty because it's not COVID relief. And then you will have to pay the additional tax plus the penalty. And then because they're not going to split it out for 3 years, you're going to end up owing a little bit more than what you guys were supposed to. So if you want to adjust your filing status from single to head of household, you will do an amended return. If you want to add your children on to your amended return, to your tax return, you want to do an amended return. If you receive business income of any sort and you didn't claim it, and there's additional expenses to go along with that income, you want to do an amended return. If you pulled out money from your retirement account, especially in the 2020 tax year, last year's tax filing, right? You want to do an amended return. The IRS will not make those adjustments for you. What they will do is make the adjustments, but won't take the additional expenses. So they won't adjust your child. They won't do the head of household. They won't take your expenses. They'll just take the income. So if I were you, I will make sure that you actually keep up with all of your income. So let me use a situation that happened recently. A client came to us and said, hey, Folasade, my previous preparer made a mistake. They left out income. And I'm like, oh, okay, no problem. I'm going to try to make sure that I don't leave off any income either and do my part. So last year I filed the tax return. And during my processes, y'all, I walked the client through their tax return line by line, okay? Like literally line by line. And so the client never said that they had additional income. So I asked the client, like I always do, is this it? This is all your income? The client like, yes. Come to find out, the client did have additional income. But in this case, it was unemployment income. So for this particular client, I did not have to do an amended return because the IRS and their state will make the appropriate adjustments. However, if it wasn't a 1099 for unemployment, then I would have done an amended return if it was for like business income. So each situation is different. Okay, so you want to definitely consult with the tax professional, guys, if you are attempting to do and amend the return, because to be really honest with you, as a tax professional myself, I see it often where a person will say they had somebody amend their return and it wasn't done correctly. So guess what? I have to now amend an amended return. And I've had that happen, guys. I've even had to amend like the third and fourth amended return because it was just so many layers of mistakes from different tax professionals, and even the taxpayer even attempted to do the amended return as well, and it didn't work. So my recommendation, guys, if you want to do an amended return to your taxes, please do not attempt to take this on your own. It is complicated to do the amended returns. You have to prepare it in a certain manner. You have to attach additional documents and an explanation to everything. So I would advise you guys, if you are attempting to do an amended return for any of the scenarios that I mentioned, and remember, that is not it. You may have to do an amended return to add on stock income. You may have to do an amended return because you sold a house or something like that. Or you may have to do an amended return to add tax monies that you paid, because the IRS will not even add that on, y'all. They'll act like you didn't even pay that money. They're like, oh, you owe us this amount of money, knowing that they have like $5,000, $6,000 of your money sitting there that you had paid. So if you ended up paying taxes, but it's not reflected on the tax return correctly, then you may more than likely want to do an amended return. Okay, so there's several scenarios, guys, and you want to pay attention, especially since, remember, over these last 2 years, there's been so many changes in the tax code. So some of you may not know that right now your tax return needs to be amended, but you're not sure if it needs to be. So I'm hoping that tonight's show will help give you confirmation to amend some of the returns that you thought was filed correctly, but wasn't filed correctly. And remember, just changing over from from single to head of household is a $6,000 credit difference. Well, $6,000 deduction difference. Okay? So make sure if you have to do an amended return, you talk with a professional. Okay? There's certain things that you cannot amend on a return either, and there's a 3-year deadline. Okay? There's a 3-year deadline. So this is another thing. Many of you take submitting extensions very lightly. Oh, I don't need to submit an extension. I'll just file my tax return. Oh, I don't need to submit an extension. I'll just file my tax return like July or August or something like that. Do you know that when you file an extension, right, and you did an amended return, that actually gives you an extension on that amended return? So let's say, for example, you want to submit an amended return this year for a tax return that you made a mistake on 2 years ago. If you have filed, 3 years ago, if you have filed that extension, you will have up until October to try to get your refund. But if you don't file that extension, you have up until April 15th, the normal tax day. This is why it's very important, guys, that you submit those extensions, because it extends your time to get your refund. So it doesn't extend your time to pay your tax, okay? An extension does not extend your time to pay your tax, but it will extend your time to get your refund. And that is very, very important. especially if you're trying to get some of your money back, you're in the process of doing a refund request, or you're in the process of submitting that amended return on the last year, you need that 6 months. And so please make sure you file those extensions regardless every year consistently, just so it can give you an extension of time to be able to get your refund if you have to do an amended return a few years later down the line. Okay. So guys, what I'm going to do, I'm going to take a quick little break, and then, well, no, I'm not going to take a quick little break. I think I'm going to just talk about the small business filings, and then I'm going to shift the topic when we come back from our break. Okay. So business filing. So for all my business people, let me just bring a little bit of clarity to all of you, because I get this question all the time. I'm a LLC as a sole proprietor. How do I file my taxes? So if you are an LLC being taxed as a sole proprietor or a sole proprietor, right? Then you will file your business taxes on Form Schedule C affixed to your overall 1040 tax return. So it is one tax return. So if you mail in your personal tax return, your business stuff should be right in the middle of that packet on Form Schedule C. That is for my sole proprietor LLCs. Now, if you are a partnership, your filing is due next month. March, I think I think it's March. I'm just confirming that March 15th is a weekday. March 15th. If it's a weekday, I think it is. Yep, March 15th, right? And also my partnerships are due March 15th. If you are a corporation, your tax return is due April 18th. Don't quote me on that. I think it's the 18th, April 18th. When the last day for individuals to file their tax returns is the last day that corporations have to file their tax return or put in an extension. For my partnerships and my S corps, you guys can also put an extension in. You have to do it prior to or on or before March 15th. For all of my corporations, you have to do your extension on or before April 18th. Okay, for this year. Now, some of you always are concerned when you guys go to this structure, partnership, corporations, or S corps, right? You have to file your tax return regardless of if your business made money. So if your business made $500, you still have to file that partnership return. If your business made 10 grand, you still have to file that business partnership return. If your business made $0, you still have to file that business partnership return. That goes for partnerships, corporations, and S corps. It is a separate tax return than the individual. And so what's happening is that many of you have heard from somebody that didn't know that you're required to file that return every year, regardless of your income. And you're accumulating thousands and thousands of dollars of penalties and interest right now for late filing and non-filing. And depending on the amount of members or partners in your organization, you're accumulating double the fees. So remember, even if you make $0 in your partnership, in your corporation, or your S corp, you still have to file the tax return by the due date. Okay? You have to file the return by the due date, or put an extension in and make sure you file the tax return by the extension due date. But remember, even if you put an extension in, if you know you're going to owe taxes on your personal side, you still need to be making estimated tax payments, guys. So you still need to be paying taxes on your income. You still need to. So remember, amend the returns shouldn't be done on your own. You need to consult with a professional to do that. And certain things you don't leave up to the IRS or your state to amend. You make sure you make those corrections because they're not going to make the corrections that benefit you. The second thing we talked about was your business filing due dates. And I gave you guys the difference between a sole proprietor LLC, S corp, partnership, and corporations, and your responsibilities and obligations. You have to file the returns regardless. With an LLC sole prop, no, they're not required. Okay, so that was a little brief update, guys, on the business filings and your due dates. Time is of the essence. So if you have not given your accountant all of your paperwork, I don't mean to throw any of my clients under the bus. If I'm still waiting for some of your paperwork to close out your books, please send them over. If you have not sent all your paperwork to your accountant to close out the books for the year, please send them over because your business filing due dates are approaching next month, right? But then also take this in consideration, guys. Because of the massive tax changes that has happened, right? Be prepared to possibly receive some type of notice within the next year or so, simply because there's additional reporting requirements from companies that were never required to report certain things. Bitcoin is starting to report. Cash App stocks, they're reporting. So it's so much going on now. All of these companies that never reported anything on your behalf now are starting to report things. So you have to keep up with your records. Here's why. They are making mistakes on your income and stuff. So your business will make $5,000. Somebody else's business made $30,000. They're sending you the 1099 with $30,000 and sending them the 1099 for $5,000. So this is why making sure you guys have all of your paperwork and stuff in order is very important, because they're making mistakes and sending out the 1099s, and you are the one that's going to have to prove to them that they're wrong, because they're going to have already sent that to the IRS as well. So they more than likely sent the 1099 to the IRS. When you file your return, the IRS is looking for that 1099. So you're going to have to make sure that you keep good records to be able to back that up. So make sure that you cross your T's and you dot your I's, guys, with all of your paperwork, because of all the massive changes. Banks, merchants, everybody is scrambling. I'm seeing the mistakes behind the scenes, and it's difficult, guys, to get a 1099 change from Square and from Cash App and from all of those companies. It is a goddamn headache, y'all. So make sure you keep up with your good records. So when you are able to get in communication with them, you're able to back your stuff up and get your paperwork adjusted, okay? Because the IRS is receiving more paperwork and the companies are scrambling, and I want you guys to be in the best position that you can possibly in. So guys, what we're going to do, we're going to take a quick little break. If I were you, I'll grab my pen and my paper and then head over to bit.ly/Folasade Radio. Join our mailing list so you can find out what guests that we have coming up, what's going down for like next month, and everything else, what topic we're talking about for the upcoming shows. If you guys want to send me any of your questions and things like that. So next week topic, we're going to talk about consumer protection. Yeah. So guys, what we're going to do, we're going to take a quick little break and we'll be right back. So your refund can still be high, or if it's not the case, your refund would definitely be lower. So that's really a few of the reasons why many of you are going to be shocked, thrown back, taken aback, beat up, disturbed, might be crying, in your feelings because your tax refunds are much lower than what you anticipated. Your business is right on that piece of paper that I can maximize, but guess what? Many of you guys took shortcuts in your business. You've been taking shortcuts for years. So you're out of luck right now. You're looking at that pile of paper and you like, yo, you serious, Folasade? Yes, I'm serious. And I'm very serious because right now your bookkeeping is what's going to either catapult your business or be a detriment to your business. And your lack of it is definitely a detriment, especially in the situation that we're in right now, where we all need to be maximizing our deductions and paying as little bit of tax as we legally could so we can sustain in our businesses and be able to afford our lifestyle. But if you are not doing your bookkeeping, and if you're not keeping proper records, then I guarantee you are not paying the right amount of taxes that you're supposed to pay, or you're not getting the right amount of refund that you are supposed to be getting. So if you are a business owner, the way for you to protect your wealth, your income right now is by making sure you cross your T's and dot your I's and get your bookkeeping in order and stop playing games like you out here not trying to build a successful business. Only people that don't want to be successful don't have an accountant. Only people that don't want to be successful don't do their bookkeeping. And right now, your small business is maybe somebody else's blessing if you were to get your stuff in order. So you need your bookkeeping to make sure that every dollar you spend in your business is written off. Let me hold you to your future. Integrity matters. Honesty matters. Transparency matters. Okay? Accountability matters. Accounting matters. Okay? And being forthcoming matters. But most importantly, being you and staying true to yourself is what really matters. Hey guys, welcome back to the Money Zone. I'm your host, Folasade, the Accountability Accountant. Guys, if you missed out on segment 1, you missed out on learning why you should get an amended return, when you should get an amended return, You shouldn't do it on your own. I gave you guys also all of the business tax due dates that are coming up, and then also a little bit more tips so you guys can remain in compliance, because there's a lot of misinformation floating on the web regarding partnerships as corporations and partnership as and corporations. So like I said, corporations twice. Okay. But on another note, guys, in segment 2, we're just going to talk about all of the tax mess so far that is happening this 2022 tax filing season. Okay. So normally I always give you guys some real life strategy, not necessarily strategy, real life experience that I embark on in the office. And so, tax season started on time, right? And so I'm part of a few Facebook groups, and like you should just see the chaos, y'all. People arguing, people quoting IRS, quoting accountants, quoting me, quoting everybody, right? And it's just a mess. But what's really exciting right now is that many of you are well aware that you have to start, and this is exciting for me, maybe not for you, but many of you are really noticing that you have to keep up with your paperwork this year. If you didn't experience any type of mess when going to file your tax return, this is the year. We've had to send almost every one of our clients back. Oh, did you get that letter from the IRS related to your stimulus payment? Did you get the letters from the IRS regarding your child tax credit? Did you get unemployment? Did you get this? Did you get this? And what I'm finding is that the more and more the tax code changes, guys, the more and more all of you have to be on top of your stuff. Because remember, in segment 1, we realized that the IRS is not going to do an amended return that benefits you. So that means you have to make sure that your stuff is in order. So keeping up with your paperwork is very, very important going forward, because it is allow you to not waste time. Number one, you don't have to go back and forth with me or your accountant, right? Then you won't have to be trying to calculate how much money was the stimulus payment, try to set up an IRS account, last minute scrambling. I advise you guys before tax season to open up your IRS tax account. Don't be afraid. They already know what you got going on anyway. Go and set up your account just to make life easy on you, but to also make sure that you're filing an accurate tax return. If I didn't send majority of my clients back, they would have missed out on the portion of their stimulus payments and also their child tax credit payments, and or would it have claimed some of the income that they have received throughout the year. So in that particular case, guys, just don't even waste no time. Let's just get our stuff in order. Open up your IRS tax account. This will allow you to see what notices they're sending you, what information they have on you, get access to your records and your transcripts in a timely manner. Okay. So you want to make sure you set up that account so you guys won't go back and forth. So that's one of the things I've been seeing. Another thing, everybody arguing about this earned income tax credit and it being the law and all of this stuff. Let me just put the pin in the balloon so we can bust the bubble. Guys, I was the first to let you guys know this. Yes, during the PATH Act, Congress allows the IRS to delay your tax return to verify it for accuracy. Now, if they send your refund early, kudos to you. If you get your refund at 15 days early, kudos to you. Kudos to you. But that doesn't mean it's not the law. One thing you have to understand is that the IRS and Congress work hand in hand. Congress knows that we need money to spend. So they're going to make sure if things doesn't seem certain, to make sure they get the money out to you guys in a timely manner so you can stimulate the economy through your consumerism. So just because they sent your refund early, 2 to 3 things have happened. Number one, they verified your information and said, oh, it's correct. 2, they also want to get the money out so you can stimulate the economy and spend the money. That's it. But it is the law. So stop all that going back and forth. Y'all talk about, is that the law? You're lying. I'm tired of these preparers saying this. It's the truth. It's the law, y'all. The issue is that they're just issuing the payments earlier. But the IRS has a right. That's all that Congress said. Congress didn't say they must. They said they have a right. Is a difference. Remember, verbiage, must and has a right is different. Okay. So let's stop all that bickering back and forth. Last but not least, y'all, I prepared you guys. I don't know why it seems like every time I say something this year, I'm saying I prepared you guys for this. I told you this last year, but I did, y'all. I prepared you guys for the reduction of many of your tax refunds. Some of your refunds are somewhat the same. Some of your refunds, well, the majority of your refunds are lower, but some of your refunds are just a smidget higher. Here's why. And I mentioned all of this to you guys. But as we can see, based on your Facebook posts and based on your Instagram rants and based on what y'all send me in my DMs, y'all are not getting it. The reason why you're not getting the same refund is for multiple reasons. Number one reason, if you have children and you receive that child tax credit throughout the year, then it is reduced when you go to file your tax return this year. That's number one reason. The second reason is that many of you may not qualify for itemized deductions any longer because you didn't pay your mortgage. You were in forbearance at that time. So if your mortgage was in forbearance, right, that means you didn't pay mortgage interest and you more than likely didn't pay property taxes. So that means you're losing 2 deductions, the mortgage interest credit deduction and the state property tax credit deduction, just because the mortgage was in forbearance. So your refund is much lower. I also prepared you guys for this. I told you guys, you have to understand that if you do this forbearance stuff, you're not going to have any mortgage interest to claim on your taxes. If you do the forbearance, you're not going to have the property taxes to deduct. And then another reason why you guys are not getting getting a higher refund as well is because a lot of your children have already capped at the age where they're no longer getting the child tax credit. Even with Biden extending the child tax credit to 17, right? You're still not qualifying because your kid turned 18 last year. So many of you are not getting that child tax credit as well. So now your child is out working, so you losing that. And if you wasn't married and they are your only child, then you no longer qualify for head of household as well. So the filing status has definitely changed. If you only had one child, they're above 17 and they're working. And these kids these days, they want their money. They want their coins. So that's another reason why your refund may be lower. In addition to you not paying the property taxes and things like that, many of you withdrew money from your retirement accounts. And when you withdrew money from your retirement account, it increased your taxable income. And a lot of you did not know that they did not extend that COVID relief for 2021. They didn't extend it yet. I'm hoping and waiting for them to make the changes to the unemployment and to the COVID relief for the retirement withdrawals, but they haven't extended it yet. So for all of you thought, oh my gosh, let me hurry up and withdraw some money, I missed out on that. And you was hoping that they extended for 2021. They didn't. So many of you are faced with a lower tax refund for multiple reasons. This is why when it comes down to these like tax credits and things like that, TurboTax and all of these softwares are not there to advise you guys on those things. You were supposed to be emailing your accountant. You were supposed to be messaging them, say, hey, should I go ahead on and do this? And then also, you also have to understand that you have to actually look at the tax code that in the way that benefits you. I know so many people will say, oh, everybody have their own strategies when it comes down to using the tax code. So you have some people that use the tax code to save. So they pay a little bit more taxes. So at the end of the year, they'll get a large amount of money at one time, and then they'll use that for their trips and vacations and bags or whatever that they want, right? Then you have some people that just want to pay the absolute bare minimum, okay? And don't give IRS an interest-free loan. And then only owe maybe $100 or so or $200 at the end of the year, but they paid only what they were supposed to be paying so they can enjoy the money throughout the year. Regardless of what your tax strategy is, you guys have to be well aware. And this is when, if you want to be that strategic, working with a tax professional is very, very important, simply because at that point, you would know what you're capable of doing. If you want that big lump sum at the end of the year, right? You would have contacted your tax professional like, oh, is it a good idea? If I get that if I get that child tax credit right now, then your tax professional would have been like, oh, well, your refund gonna be less by $3,600. So you need to weigh whether or not you want that money at the end of the year when you go file your taxes, or at the beginning of the year when you go file your taxes, or you want that money throughout the year to manage in your household. And so many of you didn't think of that. And so now your refund is much lower and you don't really know because you anticipated doing certain things and things like that. But this is why I always said that tax planning is not just for the rich, guys. This is prime example of tax planning is for the everyday American. Regardless of how much money you make, you need to plan on what's anticipated that you're going to owe, or what you may be getting back. And then at that point, you can strategize. But if you're not tax planning, if you're just winging everything, you're just floating and not being in control over what you can pay. And remember, the tax code is voluntary simply because you can put, the IRS don't keep you take every deduction. You just have to be eligible to take all of those deductions. So if you know all the deductions that you're eligible to take, you've been legally able to reduce your taxes. But tax planning is for the everyday American, not just for the rich. Prime example. Some people last year when they filed the taxes, this year for last year, right? They increased the dependent care. So that means if you pay for child care expenses, you got way more, almost double, right? Up to $16,000 for 2 children, $8,000 per child, right? By tax planning, you would have known, okay, you know what? Let me not pay Barbara down the street that won't let me claim my child care because she don't want to claim it as income. Let me go put Bob in a real, trust I got 5 minutes. Okay. Let me go put Bob in a real daycare so I can get the full child tax credit the dependent care deduction. So guys, we have to plan. And you, the everyday American, I don't care if you think you poor, I don't think you think you middle class, I don't care if you think you rich. Tax planning is for the everyday American. Whether you want a big lump sum during tax season, or you want to pay the bare minimum, or you don't want to owe anything or get anything back, it doesn't matter your strategy. All that matters is that you tax plan. And remember, truth be told, you can almost estimate how much you're going to owe and how much money you're going to get a refund. You just have to know the numbers and be in contact with your accountant so they can keep you abreast. So I know I ain't pop off for y'all because y'all, I don't know why. But guys, today was very, very informative. We talked about amending returns. We talked about business filings. We talked about why your tax refund is going to be lower. We talked about so much stuff today that I hope that you guys go back and really ask yourself, are you tax planning? Are you doing what you're supposed to be doing? So next year you can be in control of your tax and take advantage of all of the tax credits and things that may be coming our way. So guys, I hope tonight's show was very informative and you apply it. And if you do, let us know. And don't forget, you can watch all replay shows on Rip Radio Network app, or you could go to everywhere podcast is housed. And if you want to be a guest on the show, please go to bit.ly/be a guest on the Money Zone. Yeah, be a guest on the Money Zone, I think. Oh gosh, they need to make my little links smaller. Be a guest on the Money Zone. And don't forget to join our mailing list by going to bit.ly/Folasade Radio. Guys, I'll see you next week, and we're going to be talking about consumer protection. Have a nice night. Bye.